What's it like being a growth investor in this environment? I mean, you just heard the conversation we just had, right? There was value is the place to be.
Absolutely, yeah. It's a challenging time to be a growth stock investor, but our team is experienced in finding these kind of under the radar opportunities. So, the market is likely to continue to be volatile, but we see incredible opportunity if you're willing to kind of pick your places and have a longer term view, longer term horizon than the market has.
What kind of growth works now relative to what doesn't?
Great question. I think what we think is the type of growth that's not going to work is going to be the high multiple, not seeing cash flow, not seeing returns for 5 years, 10 years. The whole SPAC frenzy that happened last year, that's dead. That clearly didn't work. The type of growth that we think does work would be shorter duration growth. So what we mean by that is companies that we believe with high confidence can generate free cash flow and returns in the near term, meaning the next, if they're not doing it already, in the next 1 to 3 years.
So you're not waiting, way at the end of the rainbow for the profitability to come. You're looking for it in a much sooner place.
Exactly, because, if you think about it, that's one of the implications of a higher interest rate environment, is if we're discounting those out-year cash flows at that higher interest rate, then those out-year cash flows are worth less today than they used to be. So we need to focus on companies that are generating cash flow today.
Bear with me 2 seconds.
Sure.
Speaking of cash flow, we just got the 13F from Berkshire Hathaway, Warren Buffett's firm, of course. Christina Partsinevelos has the details. Christina?
Well, what we are seeing right now is the company selling some big financial names in the third quarter, ending this past September 30th. So Berkshire decreased its stake in Bank of New York Mellon by over 10 million shares. That is a 14% drop in its holdings. It's also cutting its U.S. Bancorp stake, dumping over 35% of its holdings. A caveat, though, the U.S. Bancorp selling was announced previously in another recent filing, so not necessarily new news right now. But Berkshire tends to focus on financial names, and it did take a new stake in Jefferies Financials and a giant new stake in the largest chip contractor in the world, Taiwan Semiconductor, snapping up 60 million shares. That is why you're seeing Taiwan trading over 3.5% higher in the OT right now, as well as a 14% increase in Paramount holdings. Those shares are up ever so slightly, 0.8% right now. And lastly, GM shares initially falling on the news that Berkshire's 13F shows the company sold 5% of its holdings, but we can see that the shares are coming back up ever so slightly. Berkshire does own more than 90 companies, so it is very hard to know if it's Buffett who is making the trades or the company's two other portfolio managers. Scott?
Yeah. No doubt. And important caveat, as we always make, and I'm just looking up some stock tickers as we're having this conversation, as of the end of September.
Yes,
right?
September 30th.
Yep. All right. I was looking to see Paramount because Paramount more recently has not done well. And I was really curious to see what was going to be in the 13F regarding that position, if anything. Over the last 3 months, it's down near 30%. I bring it up because I have the conversation all the time with Jim Lebenthal in the Halftime Report, who's been an investor here on the side of alongside Buffett. So interesting. Christina, thank you. We'll talk to you again soon, depending on what hits the tape. Back to our conversation with Josh Bennett. Names that you like. We'll look inside your holdings now. Waste Connections,
sure.
Montrose, Paylocity. Don't think I've talked about either or any of those stocks.
Excellent.
On this program yet. Why those?
Great. Well, one of the things is we believe that if we're likely to see continued volatility in the market. So one thing we look for is companies in general in our strategy that can kind of supersede the market trend. So Waste Connections. Whether we like it or not, in good times and bad, we generate trash. What Waste Connections does is they're one of the largest waste collection and recycling companies in the nation. So the reason we really like it is, if you think about it, it's a highly predictable business model with steady revenue growth year after year. In fact, they already have close to 10% revenue growth built into next year, which is outstanding. On that revenue growth, they generate incredible returns. And the way they do that is, this is what we look for, is we look for companies that have unique process, unique technology, better management. And Waste Connections has all three. So they're in the right markets. They have the right process and technology, new ways of collecting waste, new ways of processing waste, and even better for the environment, because these companies on the back end are producing renewable natural gas from the waste that's in the landfills. So Waste Connections is one of these kind of off the beaten path growth companies that we get really excited about.